Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with a lot of risk. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to incomeinvestors.com. And while you're there, you could also sign up for these free special reports that we offer to our readers, and they get delivered to your inbox. For the most part, investing is about taking advantage of industry tailwinds. And right now, the marine shipping industry, and in particular, oil and gas midstream industry, is on fire. That's exceptionally good news for today's income pick. TORM PLC, traded on NASDAQ under symbol TRMD. TORM PLC is a product tanker company that operates as a midstream stock. So oil and gas prices and tanker rates are important. First, crude oil prices rallying on record demand, OPEC production cuts, and more recently, geopolitical tensions in the Middle East. In its October short-term energy outlook, the U.S. Energy Information Administration forecasts that annual average Brent spot price in 2024 will be $95 per barrel. That's up $7 per barrel than the previous month's short-term energy outlook forecast. Second, the rates for super tankers are also robust. During summer, average spot rate for older, very large crude oil carrier climbed to $83,300 per day, while rates for newer and more fuel-efficient VLCC hit $91,000 per day. It is thought that supertanker rates will soften in the fourth quarter, but 2024 will be a banner year for tankers with market poised for rate eruption. With all this said, rising long-haul rates and a bullish outlook for crude oil are perfect combination for TORM PLC. John?
Yeah, thanks, Mo. TORM, as you mentioned, it's actually a leading pure-play product tanker company with a fleet of around 87 vessels designed to be configured to move everything from gasoline to naphtha and diesel and jet fuel for refineries to their customers. Now, their vessels range in size from between 45,000 to 115,000 deadweight tonnage, and its fleet includes long-range 2, long-range 1, and medium-range vessels. And just a little background on each one. Long-range 2 type tankers are typically used on longer trade routes carrying naphtha from the Middle East to the Far East, and also diesel from the Eastern Hemisphere into the Atlantic. While long-range 2 vessels are similar in size to Aframax, which people are probably more familiar with, they have coated tanks. Now, this allows them to carry both so-called dirty cargo like crude oil or heavy fuel, and called clean cargoes, including gasoline and other clean petroleum products. Now, smaller medium-range vessels can also enter more ports and cover shorter and coastal trades than larger long-range vessels. A typical trade for medium-range vessels would be gasoline from Europe to the U.S.
John, now let's talk about the numbers. How did TORM do in the second quarter?
Yeah, the company actually reported strong financial results, with time charter rates increasing 23% to $36,360. Now, this resulted in second quarter time charter earnings growth of 47% to $308 million, and second quarter EBITDA increased 54% to $236.8 million. Now, in the first half of the year, TORM took delivery of 7 secondhand long-range 1 vessels and 3 medium-range vessels. It also sold and delivered 1 medium-range vessel to a new owner in May, and that brought its overall fleet total up to 87.
How is the rest of year shaping up for this company?
Well, as of the company's reporting of its second quarter results, which was on August 14th, TORM had covered 72% actually of its 2023 full year earning days at 36,531 per day. And coverage for the third quarter of 2023 was 74% at $30,534 per day. Now, for the full year 2023, time charter equivalent earnings are expected to be in the range of $1.05 billion to $1.17 billion, with EBITDA in the range of $775 million to, I think, $900 million.
And what about its dividend?
Well, yeah, that's where it gets more fun. Thanks to its strong cash generation, TORM was able to return $126.6 million to its shareholders as dividends during the second quarter. Now, the company's board declared a second quarter dividend of $1.50 per share, or $6 on an annual basis, for a pretty massive yield of 20.91%. Now, TORM's dividend, because it's tied to profitability, can fluctuate. The company had the misfortune of announcing its dividend in early 2020. Suffice it to say, the financial windfall did not last long. with the board suspending the payout for 2 years. Before it suspended the quarterly dividend, it was paying around 85 cents per share. It resumed its dividend in August 2022 with a payout of 58 cents per share. It's been growing significantly higher since then. As I just mentioned a couple seconds ago, it just paid out $1.50 per quarter. Now, the big question is the dividend safe? The dividend is safe as long as the company is making money. Of course, on a purely technical level, the payout is safe because it has a really paltry payout ratio of just 65.41%.
Let's talk a little bit about what's happening with TORM stock.
Yeah, well, it's nice to see that TORM is able to provide a massive dividend, and it's also providing rising share price. Yields move inversely to the share price. More often than not, a company has a massive dividend, but it's a company with a lower share price. This is totally not the case with TORM stock, which is up 66% over the last 12 months. TORM stock is also up 11.5% since we last looked at the company back in mid-June. Now, those are big stock market thumping gains, but even conservative Wall Street thinks additional double-digit gains are on the horizon. Of those providing a 12-month share price target, the medium target is $36.40, with a high estimate of $39.46.
All right, John, thank you so much for your analysis. Just to recap, TORM PLC is a pure play product tanker company that's reporting strong financial results, big increase in profits, and recently resumed its frothy high yield dividend payments. Thanks to its growing fleet, rising freight costs, and robust expect crude cargo growth, the outlook for TORM PLC stock and its dividend remain excellent. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.